Well, hello there, my friends. Chris Marcus here with you at SilverFest II. Welcome on in, everybody, to the panel titled How to Bust the COMEX. And look at the silver celebrity lineup we have here, plus Craig Hemke. He was so confident that he could just beat JP Morgan's corners into the end zone all day long. He slept a little late. He's getting connected. He will be joining us from tfmetals.com in a couple of moments to share his insight on how close we may be or what would be required to see a failure of the COMEX on a greater level than 1980. See, back then you didn't have the internet. And I had to read that book by Paul Sarnoff where he described the fraudulent actions the CFTC and COMEX took back then, including, and I'll give a 1 ounce silver prize to whoever knows, margins were $1,000 per contract, how high the COMEX actually raised them at its peak, silver ounce bounty on that one. It's so fraudulent. Roston Benham's dad must have been watching that. He was raising little CFTC commissioner. And with that said, let's introduce the panel. Although before I do that, I might say this is not theoretical academic knowledge. This is the kind of stuff empirical because Rafi, the wise Farber, has actually, maybe Rafi was all it took to bust the COMEX because so far they have not delivered his 5 1,000-ounce bars. So Rafi Farber of the Endgame Investor, welcome on in, my friend. How are you today, sir?
Good to be here. I'm glad I'm here. I usually hate Zoom conferences, but I'm glad to be with you guys. It's a pleasure.
Well, fortunately, this is on the Hop-In platform, so no Zoom necessary.
I'm in virtual.
Rafi, great to have you here, as we've talked about several times in the past year. In terms of if you wanted to stay up to date on the financial markets simply by reading one article per day, did nothing else, I send people to Rafi Farber and his daily column, The Endgame Investor, on Seeking Alpha. So thank you for being here, sir. A lot to dig into. And with that said, at least on my screen to Rafi's right, is handsome Dave Kranzler. Dave, the legend, portfolio master, who not only has explained in great detail why the COMEX, on whatever time scale it takes, is eventually a Ponzi scheme that will collapse just like the U.S. government, but he also called his shot back in the years leading up to the housing bubble. One of the good things that came out of Wall Street, Dave Kranzler of Investment Research Dynamics, which can be found at investmentresearchdynamics.com. How are you today, sir?
Doing okay. Thanks for asking. How about yourself?
I am doing wonderful. We're getting warmed up. We had a little pre-party and ready to go today. I might add, I saw someone in the comments. Let me see who that was a couple minutes ago. Miles Nelson says, Cliff High said the 28th shows a release of tension. I did hear him mention that. I heard him also mention that the Evergrande situation in China had some additional level of default occur between the 23rd going into the 24th. So we will see if there is an economic event planned today. Maybe the COMEX, after if some of their executives listen to this panel, are just going to quit like Dick Hayes out of the Perth Mint after Auditor Rob Kientz of goldsilverpros.com kicked his ass not once, but then brought some of his audience members on to make it a full tag team, just like the old WWE days. So Rob Kientz, great to have you here. Hombre, how's it going?
Man, I am so excited to be here, Chris. Love Silverfest, my favorite time of year.
Oh, Rob, wow. Silver Chris is going to be dishing out ounces of silver to the first person who knows the peak of they raised the margins from 1,000 then to 2,000 to 3,000. So whoever knows the peak that it got to, silver ounce from Santa Cruz here.
Are we allowed to guess, or is this just for the audience?
Well, let's give the audience a chance first, Dave. I know you're excited to play. Maybe there might be a silver panda coming your way before the weekend is done. We shall see. Although Andy Schectman also joining us on the panel. grizzled veteran, duking it out in the front lines. So, Andy, you really see a different perspective of the COMEX shenanigans, really, that most people don't have access to. And plus, in your collective decades, voluminous experience from all of that time. What you got there, Dave?
It's a 10-ounce maple leaf. I'd rather have that than the Panda.
All righty. Well, maybe Andy Schectman of Miles Franklin at milesfranklin.com could source that type of thing for you if you find him in one of the booths later, or email where, Andy?
Andy at Miles Franklin, or Arcadia at Miles Franklin, more appropriately.
All right. And how are you doing today, sir?
I'm good, buddy. It's great to be here. I really wish I was sitting next to you there in Mexico, but maybe next year. And yes, Dave, I have the magnificent maple leafs just for you.
Yeah, but I want to win a free one. A subscriber sent me that one.
Nice.
Well, fortunately, Dave, your chance might be coming up because this panel is sponsored by Silver Viper, run by Steve the Legend Cope, who taught class last year on a variety of silvery topics. And in addition to bringing us today's panel, they will also be hosting the lunch session. So whether you're in your time zone, it's breakfast time or lunch or maybe even dinner at 12 p.m. Central, right after we're finished busting the COMEX, in the Silver Viper booth, we will be having lunch. And fellas, perhaps some of you guys can stick around in the booth, and then if people have questions based on what we're talking about today or some of the brilliant research you've all done prior to today, they can interact with you guys directly. Any of you folks going to be able to hang out? Dave, I know you're coming to the Silver Viper booth. You get to talk directly with Steve Cope, and you're a big Silver Viper fan. So thank you.
I am indeed.
Craig Hemke of TF Metals. Yar, is he still on his way over? He'll be joining us too, but with that said, let's get into the action. Rafi, why don't you recap the entire process? Give us a brief synopsis since we decided to see, we got that email from Interactive Brokers saying you can take delivery, and give us a rundown of what's happened since then.
Yeah. So give me a time limit here because it's a long process. Let's say 2 minutes, 3 minutes. I'll try to make it quick. So yeah, Chris, you got the email that you forwarded me that Interactive Brokers was supporting physical delivery. That now they've never this brokerage has never ever delivered a physically deliverable contract, and we found out the problems behind that as soon as I opened up the account. First of all, you have to declare an intent to receive on a contract in order to get the warrant. And let's clear up some terms here. Physical delivery, when a brokerage means physical delivery, it means delivery of a warrant that gives you the right to 5 specific silver bars held in a depository somewhere. You have no control over which bars. If you actually want the bars to pick them up with your hands, that's called loading out. You got to load out and then get the bars. That's a different process. Now, Interactive Brokers does not support loading out, and we're working through that now, and I'll get to that at the end. So we put the cash in the account. And the first thing I did was try to declare an intent to receive on the contract that I bought, and it didn't go through because there's something called weight tolerance, meaning the 5 bars that you can that you declare intent to receive on can be 10% more than 5,000 ounces. So your multiplier on the contract, let's say it's what is it, 2412 now? Instead of multiplying that by 5,000 and having that cash in, you need to multiply that by 5,500, which is the maximum the bars could be, because they could be as much as 10% higher. Practically, they won't be, but you need to have the extra cash just in case, and that's the maximum. Above that, you have to have the margin to support the maintenance margin to support the contract staying in your account without being squeezed out. So you have to have, I think it's something like another 10,000, another 14,000 above that. So if you want to try to get a warrant, you have to have something like 15 to 20% more cash than the warrant is actually worth. Even when I successfully filed the intent to receive, they must have canceled me about 15 times, and they tried to force me out of the August contract, saying they couldn't do it and they couldn't give me a reason. So I had to roll over into September myself rather than be forced out. Eventually, after a lot of fighting, and when they did force me out of September once, And then they said sorry because their systems didn't match up with their intent. The intent to receive didn't work. Whatever. I had to call a bunch of people. It was a big mess. Finally, I got a call from them saying that if you want to have this warrant, we can do it. You just have to. I'm feedback. You just have to declare the intent to receive one more time. So I did it, and I declared the intent to receive, and I got the warrant on the last day of delivery on September 29th, actually when silver bottomed. I think like around $21. Now we're in the loading out process, and they don't do that. So we're trying to. They only work with other FCMs, which are called futures commission merchants. And me and Andy are trying to work together on this to get an FCM to transfer the warrant to, so he can take the bars, and then we can split them up, and people can have coins as souvenirs of our loot from the COMEX. If this works, and we're in the end stages of this, hopefully it'll work. If it works, I'm envisioning silver apes coming together in groups of, let's say, 50 or 100 and funding a contract, opening a brokerage account somewhere and just buying contracts at a time, teaming up with retailers who are FCMs and trying to load out. I don't know if it's possible, but if we can do it, we will document the entire process and get it onto the next group who can just take what we did and move from there.
Yeah, we are going to document that process. We're putting, I think, Rafi, you're working with our team to put together some video, some audio, screenshots, and somehow we're going to release a visual representation of this whole process.
Yeah, I got all the material in a file.
That's going to be fun. So, Rafi, when you first started this process, do you think it was going to be that difficult to actually try to get a bar out of the COMEX?
Yeah, I did. I didn't know what the details were going to be. I didn't know exactly what I was going to go through, but when this first started, I'm like, I can't believe we're actually doing this. And I was just happy for the opportunity to try and get through the process. But I had no idea what the details were going to be, but I knew it was going to be banging my head against the wall for a long time. And if this actually succeeds, I'll be pretty surprised, pleasantly.
So, Rafi, how many people had to get involved for you to do this? This isn't just a one-man show, right? You've got other people that are working with you at every stage to get this done. Yeah,
I mean, everyone on this call was necessary. Chris was necessary to connect the right people with the funding, and Andy's necessary to team up with the FCM to try to get the loadout. And Rob, your video person is trying to help me with getting the message out. And Dave, you had a history of loading out in the COMEX in the past, helping with the information they need to know. So basically, yeah, it's a big team. It's not just me. I'm really a pretty small part of it. I'm just the one banging my head against the wall. Everyone else is trying to help me break down the door.
Hey, Rafi, some additional good news as we were discussing in the BlackRock Silver booth earlier today. We now have a bunch of really talented video makers in our audience. So I know you've been collecting a lot of footage, photos, and notes, and you're also doing a lot of stuff. So we have some people who can help with that, turn it into some really entertaining videos of what a circus this COMEX really is. So even though you have a hot new YouTube channel, which I highly recommend people check out. What is the name of your YouTube channel, Rafi?
Just my name, Rafi Farber.
I can't imagine how you pick that one up. I mean, but it's simple. It makes sense. Easy to remember. Rafi Farber on YouTube. Great channel, but we have someone who can help take that video footage so we can have fun sharing what you've gone through. Based on what you said, though, my question is this something where right now that you've talked to the different people, let's say if we finally get the bars, do you think if we go back now, we want to take delivery of 1,000 contracts because we have other people who want to participate? Do you think it's something where we just had to figure out who to talk to, all these different steps? Or what do you think would happen if you did everything the same way but had a couple extra zeros behind your one?
I don't have a good feeling about it, but I don't know for sure. I mean, I've been contacted by other brokerages to try to help me in this process. But the problem with them is they need us to
whoa. What did say that again, please?
I've been in contact with other brokerages who tried to help me with this process, but I'm trying to get it done through Interactive Brokers because I have everything already set up there. But it could be easier with another brokerage who is more amenable to trying to do this. I mean, Interactive Brokers is a very popular one, but they are very new at this. They don't exactly know what they're doing, and they're not trying to support it that much. But other brokerages might, and maybe we'll try a different one later. So a different brokerage might help enable people to get 1,000 contracts off. But if it gets a serious number where we're actually threatening the registered stocks and the supplies, and you see these big swings in the physical stocks, no, I think they're going to shut it down. I think that it's not going to be able to happen. But if we can threaten them, that's a good start.
I think they're definitely going to try and shut this down before we get to 5, because I think the break point is somewhere in that range. Rob Kientz and Andy Schectman, I'll direct this next one to you. The reason I asked you to repeat that, Rafi, I guess when you said brokerages had contacted you, at first I interpreted that as other investment operations that said, hey, we saw what you're doing, because the smart money reads your column, watches your YouTube channel. They're like, oh, we could actually put pressure on this fraud that's occurring in the markets. So Rob and Andy, I know, Rob, you have a lot of viewers. Andy, you have a lot of direct Silver customers. And in one of the previous videos, we talked about how if the COMEX can stay intact after actually delivering one contract, and other people might want more. What could you speak to? Andy, I'll let you take it first. You do a lot of these interviews. You talk to a lot of people. Do you think that if you actually are holding the bars, other people would want to have the facility in place, would want to add on to that, so that one could grow into 10, 20, which seemingly would be past the COMEX's ability to deliver?
There's no question. If there was an easy mechanism, I think, guys like Jim Sinclair was saying 15, 20 years ago, the only way to beat the cartel is to take possession, and he was telling people to actually take possession of silver and gold contracts off the COMEX. This is it's a great idea, but I'll tell you, it's been shocking to me how difficult it is to pull this off. I mean, just watching what Rafi has had to go through is incredible, and this is with all of our help, and we all have an angle, whether it be expertise or no people, to make it supposedly easier. If it were able to be done seamlessly, I guarantee you we could very quickly make a large dent in the COMEX. People would do all they could to try and get a market that shows fair price discovery instead of one that is schizophrenic and volatile based upon completely counterintuitive rationale.
Rob, what would you say about that?
Yeah, I think what this shows is they don't really want delivery on the market, and they put every obstacle in your way possible. And it really, the delivery process it's a ridiculous process to begin with. But at any point along the way, it can fall apart. And it's almost like that's normal. Like people who try to go through this system, they're purposely funneled out of the system. And to actually to get that delivery actually to occur, there's so much manual follow-up and conversations and emails that have to occur for all of that to happen, as if it's not really ever intended to happen. So I don't think the system is really set up for a lot of deliveries. It's very clunky and manual and kind of stupid the way that they do it. I think it's pretty obvious they don't want delivery on the system, all the work that it takes to get there. Or if you do get delivery, you're one of the big players and you have a whole staff of people that you can have to troubleshoot all this crap. Because I know Rafi spent a lot of time on this. If you're one of the big banks or you're one of the big entities, you probably have a whole staff, to do this.
Well, they're almost holding it out to FCM merchants. And if you're not a futures commission merchant or connected to one, you can't get possession of it. And that's the hardest part. You're talking the biggest, the big companies. So you're either connected to them or you're one of them, or actually loading it out becomes next to impossible. That's the stumbling block. Yeah,
to your point, it's a big player market. It's meant for the big guys. It's not meant for retail traders. That market, I mean, we listened to Rostin Benham and the comments he made about tamping down silver at 30. The whole point of that market is, one, to control price and flow, and two, to facilitate the big traders getting what they want when they need it. It's really not your typical retailer's market. It's not like the stock market. It's not like, any market that you can set up your own account and just get right into, like you go to Charles Schwab. It's meant to facilitate the metal only the people that need it, but it's also meant as a price control mechanism to make sure that the big players are all getting the prices that they want. And it's been construed as a market in which it sets the price for everybody, but it's not an everybody market. And that's the thing that you learn when you get involved in this. When you look at the data, you do what Rafi's doing, you actually try to participate as an independent in the market. It's not meant for you and me. They want you and I to trade those gold and silver prices, but that's only to benefit them. That, it's the perception of this market's for everybody, but it's not really.
It's not clear that the COMEX was ever set up to be a bona fide physical market. I mean, the Hunt brothers proved that in 1980, right? I mean, look at what happened to the Hunt brothers. The revisionists say that, oh, the Hunts tried to corner the market on silver. Well, that's bullshit. What happened was the Hunts were doing just simple math, the way de Gaulle did simple math during the London gold pool era in the 60s, and realized the U.S. Treasury was running out of gold that it could deliver to foreign treasury holders. The Hunts said, hey, there's a lot more paper silver in circulation than there are physical bars in the COMEX that are available for delivery. And so they said, hey, we see an arbitrage here. And that's what they tried to do. And they immediately got shut down. The COMEX went to sell only mode. You could only sell a long position. You couldn't buy silver contracts. You couldn't short silver contracts. And they effectively shut down the Hunts' move to convert their silver contracts into silver in the vaults, because there wasn't enough silver to satisfy what the Hunts wanted. And it's been that way ever since. I mean, there's always way more paper silver outstanding than there is actual physical silver that's available to be delivered. And when you say, the big boys, it's set up for the big boys, it's not clear to me that there's much silver that actually leaves the COMEX other than what the banks move in and out. I mean, we don't know who the actual entities are that are moving silver in and out. When you see the reports that they publish, I'm sure there's some jewelry companies that are able to take delivery of bars that they need to make their jewelry, but that's small amount compared to the amount of silver that the banks are short on the COMEX.
Yeah, wasn't there a previously confidential document that came out recently that explained the whole purpose that the COMEX got set up and all these markets got set up was to create volatility in the prices, to discourage people from owning the physical precious metals. I believe I saw that official document. Somebody remind me where that came from. But
well, there was a letter, and actually it's on the GATA website in the archives if you want to sift through and find it. I don't know why I haven't ever downloaded it. I just never felt the need to. There was letters going between Kissinger and his financial advisors, and they basically said, we need to create some sort of mechanism that will channel institutional money away from actually buying physical gold and into a surrogate for physical gold. Well, about a year later, COMEX gold contracts were introduced in 1974. And ever since then, it's the COMEX has been a total Ponzi scheme.
Yeah, that was
and
timed
this is official
perfectly.
letters that were declassified, and GATA has them.
Right. That was timed perfectly for the re-legalization of gold ownership by American citizens. Same day.
Yep. And the letter actually said that the whole concept was to make the market so volatile that the average person wouldn't have any interest in chasing it.
Right. That's correct.
Andy, do you think they've been successful, or, as a dealer, what are you seeing interest in the precious metal? Say from here to 10 years ago, where's the interest in the precious metal?
The interest right now is exponentially greater than it's ever been. And I think there's a large segment of the population that's woken up to all of the issues surrounding what's going on, whether it be inflation or just the fact that the markets are at all-time highs in an environment that doesn't support it. So, look, the volatility is enough to really bother a lot of people. And those people who are bothered by it are owning precious metals for the wrong reason. They're buying it because they think they can get rich in owning it. And that's never the reason to own it. And I get it. If you've been doing this as long as I have, you understand the volatility. If you're new to it, you don't. And the thing about the volatility, what they're so good at, like we were talking about backstage, what you said, did you look at the silver market this morning? And the volatility is not only insane, but it's also counterintuitive to what's happening. But if you take a step back and you realize that they're using that volatility, the big money is, to their advantage. Look what happened in August when the price of gold smashed by $100. When we talk about busting the COMEX, the price of gold fell by $100. And who was sitting there but one of these managed money traders, the others, this big gold whale? I know we're talking silver here, but I'll make the point in the gold market. One trader sat there as the price got by $100 an ounce and immediately purchased 38,000 gold contracts, December delivery gold contracts, with initial margin deposit of $330+ million. You'd have to post for that. And that's $7 billion worth of gold. So, you know, not only are they injecting a tremendous amount of volatility to keep the public out, but to everyone's point, it's for the big boys. Someone accumulated 38,000 December gold contracts. Now, if they do what they've been doing for the past year and a half, they'll stand for delivery in December. And that's when things get, you know, exponentially more interesting. But yeah, the interest is far greater, and so is the volatility. And the big money is using it to their advantage. And thanks to guys like you, a lot of the public understands this. And rather than getting upset, they're buying on the dips. And I've said it for the last year and a half, this market ultimately will define itself by the inability to easily source product. Just look at what's happening with the U.S. Mint and the price of silver eagles. It's crazy, and that's going to be emblematic of the whole industry.
Rafi, let's say we leave aside the when of the matter. First, do you think it's an inevitability that this current paper contract system in the silver market is going to eventually break, whenever that may be? Or is there some other outcome possible?
No, I don't think there's any outcome possible. When people need a monetary medium, and monetary media can only stretch back into the past. Meaning, the only reason you know how much you have to work and how much you have to buy is because you extrapolate from prices yesterday. So it always goes back into the past. It goes back all the way to when silver began as money. You know, the word for money in Hebrew is kesef, which is silver. And in many other cultures too, silver and money is the same word. So when a global attack on the dollar is launched by consumers on the street level, meaning in open markets all over the world, trying to buy groceries. I'm not talking about big boys, but like we talk about the big boys and the big banks. The public is much bigger than any of these people. So when the public finally understands what's going on, and they will overwhelm the big banks, they'll overwhelm the FCMs, they'll overwhelm everything, because they'll just act, and the dollar will be destroyed, and it'll have to go back to gold and silver, specifically silver on the retail level, and there's no other way out of it.
Yeah, and Rafi, based on that, if we assume that it is going to happen at some point, what do you think are some telltale signs that would happen the day before, the week before, the month before? So just in terms of some markers, I mean, we don't know the exact future, but that's really how I've approached this for the past 10 years, where similar, like the people at Enron, if nothing else, you probably saw the executives were so darn nervous. You probably could feel it. So, and I'll give each of you guys a chance to answer this one, but Rafi, start with you. What do you think we might see some events, just if it does appear, say, okay, maybe this is a marker? What do you think we might see before that happens?
I've been thinking about that specific question in detail over the last few weeks, because I think we are starting to see the beginning signs of a vertical move. And what we should start to see is a lot of different futures, oil, natural gas, coal, cotton, getting locked in backwardation with spot prices way higher than futures prices. And then you'll see destocking. Destocking meaning the power plants and all these other companies and firms that stock physical commodities, whether it be oil or coal or wheat or gasoline, whatever it is, they'll start to destock, and we'll see less and less supply, but the backwardation not resolving itself. And then it'll spread, and you'll see the whole commodity complex start to go vertical. And we're seeing it with coal, we're seeing it with natural gas, we're seeing these cascades. And the last two futures contracts or futures markets that should go into backwardation will be silver and then finally gold. And when those two markets are locked in backwardation, then you'll start to see, just like we're seeing in natural gas, just like we're seeing in coal, which I just read, American stocks of physical coal are at 24-year lows since 1997. Then we'll start seeing the COMEX start to lose a lot of supply very quickly. And then after silver is done, it'll go to gold and the dollar will be done. Exactly how long this process takes, I don't know, but we're seeing things locked in backwardation in different markets already now and destocking in these consumable commodities. So it's just a matter of time before it hits the money commodities.
Dave, you want to take that one next?
Yeah. I just worked up some numbers really quickly. And this is silver open interest and warehouse stock data that reflects activity through the end of yesterday. And currently there's 141.8 thousand silver contracts of open interest on the COMEX. That's 709.3 million ounces of gold. Okay, and that compares to just 97 million ounces, of silver. That compares to just 97 million ounces of silver in the registered category, which is silver that has been supposedly designated as available for delivery. So you've got over 8 times the amount of paper open interest as you do available silver to be loaded out on the COMEX. And then if you say, well, that's the total number for all the months. If you look at just the front month, which is December, you've got 111.6 thousand contracts of open interest. That's 558.4 million ounces of silver. So you're still at 5 times the amount of paper silver open interest as you are with registered silver ounces that are available for delivery. So, if you just had 20% of that December open interest stand for delivery, you'd bust the COMEX. So one of the things that I think you'll start to see, all that stuff, I agree with Rafi in terms of other commodities, backwardation, et cetera. Unfortunately, they've made it more difficult to analyze the degree to which gold and silver in backwardization, because the LBMA no longer publishes the gold forward and the silver forward interest rates. And you used to be able to measure the degree to which the market was super tight by just looking at that data. Well, of course, they made it opaque. But I think what we'll start to see on the COMEX specifically is they'll start to raise the amount of margin on gold and silver contracts. And just before they, get to a point where they declare a force majeure because they don't have enough metal to satisfy loadout. And again, I'm differentiating loadout from delivery, because when you take delivery on the COMEX, as Rafi pointed out, you get a warrant. And even if you say, okay, I want to turn in this warrant for bars that but I'm going to keep my bars at the COMEX. It could be any bars. They don't have to have enough bars available to satisfy the amount of warrants outstanding. Because how would you know unless you actually went to the COMEX and said, hey man, I'd like to see my bars and it better match the serial number on this warrant. You don't know, and no one ever does that. So I think right before the thing really blows.
Did you call the COMEX and say that? Hey man, I've never seen the bars. And we could record that from one of your
I don't know if I would say exactly. I'd actually fly out there and knock on the door and say, show me my fucking bar, you criminal.
I have called them.
You need that footage, Rob. Does the video and silver community need that footage? That would blow up YouTube. They couldn't handle it.
But phone calls and emails are shit in this world. You got to go and knock on the door. But at any rate, I think, right before the top blows off, I think you probably see these contracts go to full margin. In other words, you can't buy a contract unless you have, 100% of the cash.
Silver community.
What was that?
That was Chris talking to himself.
No. Yes, you wouldn't be able to. You're not going to be able to buy a contract unless you had the full amount of cash that represents the value of that contract when you buy it. And I think we'll see that also before the whole thing blows up.
Andy, how about from your perspective, seeing it on the dealer side? You talked earlier this year about the increased premiums on the 1,000-ounce bars. We did several shows and talked to James Anderson and others about how if someone came and said, hey, I want delivery of 1,000-ounce bars now, what you said, even if they were willing to pay you double the regular price, you can't you still can't get it. So from your perspective in that part of the chain, in a world where supply chains are breaking left and right everywhere, fortunately, you told people about the frailty of the silver supply chain. So what signs along those lines might you be looking for?
Well, I mean, you can get some 1,000-ounce bars now. They bounce back a little bit. They're not readily available, but they are available, but not in a large quantity. You're beginning to see it as premiums are rising once again. The UK Mint ran out of blanks a week or two ago. The U.S. Mint has hardly made anything right now. The primary distributors are rationing allocations. The whole year, the U.S. Mint has hardly made any Silver Eagles. You know, I went on your show and said that they're going to shut down for 3 months. Got a lot of crap about people say, well, they never did shut down. When you called the Mint, they said, we're not shutting down, but they shut down. They produced nothing from April to July, nothing in Silver Eagles. They went on allocation 2 weeks into on Gold Buffaloes, 2 weeks into the new year in January. They have been the model of inefficiency. If you just look at what the demand is in this industry, every company, James Anderson will tell you, is 4 to 5x from what it's normally been. The demand in this industry right now is unlike anything I've ever seen. If I were to use that as a benchmark, I'd say we're very close to it. But I'll answer the question a different way. As I've said for a long time, over the last 4 years, you've seen the biggest money in the world migrate towards precious metals quietly, using the manipulated paper price to run cover for massive accumulations, whether it be the central banks acquiring it and repatriating it from Bank of England and the New York Fed, whether it be the commercial banks like JP Morgan amassing 1 billion ounces of silver and 35 million ounces of gold, while paying a $920 million fine for doing so. Whether you talk about the others, this third group of reportables on COMEX that I keep talking about, who took 300 million ounces off of COMEX last year, and this one others managed money whale on the gold side, purchasing 40,000 COMEX contracts, 4 million ounces of gold. Who's got that kind of money? The biggest money in the world sees what's coming, and it's going to pop mathematically. Like Rafi says, there is no out. The thing of it is that people should focus less on when and more on it's coming. It's inevitable. And so the only way that you win is to prepare, is to load out, is to take possession, and to do so before it becomes so obvious. Because I would argue that it just seems that every single event that we see happens on a Monday morning, happens overnight between Sunday and Monday. You're going to wake up to a new reality one day where bang, it's shot up because the people that have been holding it down will either have covered their positions overnight and they're just going to let it run, or it will be in a fashion that we won't have much. Even us who have our ear to the track, we're going to have no warning of something that's going to change that large and that fast. I think I don't know that you're going to see it. You are seeing it right now, and that's the point. We are seeing it. And the counterintuitive nature of the price action versus what we all see and agree upon is what drives people mad. But just understand that, you know, mathematics and economics will catch you. You can't run from it. You can manipulate it, but ultimately what we're talking about will happen. And I would argue all the things that you've all said and all the things that I just said point to it happening right now. When's the final moment? I don't know, but probably sooner than we all expect.
I just to add to Andy's point here, and I agree. I mean, we've essentially seen at the retail level, we've basically had shortages now since the summer of 2020,
even before.
So over a year. Now we've had these periods of time where there's shortages at the retail level, you know, at the mint level, going back for over the 20 years that I've been doing this, but they've never lasted this long. You know, maybe they last a few months. And one of the arguments that I would make is that when you see that the supply of silver and gold is being restricted at the retail level, it means that they need that silver and gold. They're diverting that silver and gold that might otherwise funnel through the retail system to the big boys because they need it. And that in and of itself is a sign that the physical market is getting very tight relative to demand at all levels. And I actually said back in, 2004, 2005, no, I take that back. It was when we were seeing 50, 60% premiums in 2008. Remember that? We were seeing
Yeah.
60% premiums on Silver Eagles back in
It was
2008.
100%. It was 100%.
Yeah, I said, well, yeah, especially on junk bags of junk. But I said eventually we're going to see 100% premiums on gold, and that's when you know that this thing's ready to blow up.
Andy, any thoughts on that?
Yeah, no, I think it's interesting too. The premiums on gold are very low right now, and the reason they're very low is that if you're a dealer, you have an obligation to take a certain amount of inventory, kind of like a car dealer. They buy cars, put them on their lot. They take allocations. They take product from their suppliers, even if it's not going to be sold. Well, there's a cost of carry, and it sits on your shelf. The last 2 years, last year was our biggest year ever. This year, we've probably done as much business as we did last year. And honest to God, 95 or greater percent of every sale we've done in the last 2 years has been silver. And so the dealers are struggling to keep up with silver. It's so hard to get it and to continue getting it coming. It's like running a logistics company. But gold, it's sitting there collecting dust, and that is the cost of carry that you can't sell. So right now, you're seeing larger money come in that can't handle $5 million worth of silver, which is a few 100,000 ounces, and trying to take possession and store that becomes a real issue unless you have it stored. But gold, on the other hand, they'll buy some, but that's a rare exception. Most people out there have been listening to you, Chris, and the silver story for a few years, and it's a convincing one. It's the opportunity of a generation, in my opinion, on every single level. And getting silver, the premiums are super high, and they're only going to go higher. Dave is right. When you see that happen in gold, it's game over, because there'll be nothing to shelter you from. I mean, you can't. Platinum and palladium are already impossible, and they're an investment. They're not wealth, and the premiums are already high, and the amount made is nothing. But when you talk about silver and gold, you're already experiencing that in silver with super, super high premiums. Right now, if I sell Silver Eagles at $9 an ounce, I'm the cheapest in the country on 2021s. That's insane. And but on gold Eagles and all gold bullion, the premiums are not high right now because the real demand is in silver. When that flips to gold, you're right. I think that's when it's pretty much game, set, match, because there'll be nowhere to hide at that point.
Based on what you just described about the gold inventory at coin dealers, when you get the phone call from a hedge fund or a big investment fund saying, "Hey, we'd like to buy your gold," let me know right, when you get that call, because that's going to be a sign right there.
I've received that phone call, as a matter of fact, and I'm going to try to be as discreet as possible here. But I have recently received that phone call.
There you go.
And from a very large one. And I am being told that by right after Thanksgiving that they want to put $100 million into gold. I guess I'll believe it when I see it. But they're expecting seminal events. They're expecting that Rubicon to be crossed financially sometime towards the end of the year. And they want to get in front of it. And we've been making arrangements and having phone calls. When I tell you I've never had a phone call like that in 31 years, that's a massive understatement. I just spoke at a family office event 2 weeks ago. Never would have been asked to do something like that in years past. The big money in this country, the private money, I think a lot of them look at their assets that have gone parabolic, the K-shape, where the people with the assets and they're looking at it and saying, how the hell is this happening in this world? It's unjustified. I'm scared. What do? I go to gold and silver. Well, it's happening. And that, if there is, people always say it's different this time. Honest to God, if there's a difference this time, that's what it is. I'm getting the ear, and they're finding me. I'm not calling them. They're finding me. I'm getting the ear of people who would have laughed you out of the room if you brought up the topic of gold over the last 30 years. And now all of a sudden, it's not so funny. And I think we're a lot closer to this moment, you guys, than we realize, because we've all been beaten up so much. You feel like you just got out of a hurricane. You feel beaten and battered, but it's coming, and it's coming a lot closer if you look at the cumulative concern and fear that I hear every single day. And now it's reached levels that I never would have dreamt of.
Yeah, I think what happened was a financialization of the economy, and then you have negative real interest rates when you consider, inflation and the interest rates that have been set by the central bank. And in that environment, what can happen? We had a private event at the New Orleans Investment Conference last week where we talked about this. I hosted it, and I had a hedge fund manager on there, a financial person on there. He said, when you got negative real interest rates and you got the Fed pumping money like this, the value of paper assets can go to infinity. You literally could see the stock market melt up to never before seen numbers. And all of that melt up occurs because all the algorithms that are trading it up. The algorithms aren't complex enough to understand what humans understand, which is this is a false run up, in the paper assets, when you look at the economy. And so what you're seeing is this melt up of these financial assets and it absorbing so much of the money that when that bubble breaks, it's literally going to flood to whatever has value. And gold and silver are going to be two things sitting there. And I think gold is going to do its usual shot, but I think silver is going to be disproportionate because there's so much less above ground available stock of silver than there is gold, that when you see silver run, I think we're going to see it run to levels that people could not possibly have imagined, because the average person's not going to be able to afford gold. Gold, I think, is going to pop first, and they're not going to be able to get it. The big guys are going to get the gold. I think the small people are going to go to silver, and silver is going to go nuts. I don't think anybody can even here predict the potential price of silver. It could literally be unobtainium at some point where at any fiat price, no one's giving up their ounces of silver. And I think we're, like you said, Andy, we're getting so close to that. People have started to figure out the P&E ratios of the stock market are beyond stupid at this point. Nobody believes them. Not even the financial press is even starting to talk about, okay, when does this thing, stop? It's gone past the point of past the point of making sense. And again, it's those algorithms trading up those markets. But that money, when that pops, that money is going to flood down. And there's not going to be a lot of real assets it can go into of actual value that people want. And that's probably why you got that phone call, because the people in the markets are seeing that and they're like, we need to get into real assets. Because when this thing blows, when that stock market blows its top, it's going to be like Mount St. Helens. There's going to be ash everywhere and people are going to be scrambling around for the metals.
I agree.
Hey, Rob, we have a couple minutes left on this one. I pulled this up earlier. I found this interesting. There was quite a run up if we back out to the 5-year. See, a lot of metal was being added to the COMEX stockpile.
Mm-hmm.
Then it gets right to a peak. Would you guess, coincidentally, what time period that was? Oh, yes, right around February 1st, when Jeff Curry was committing felonies on multiple national broadcast channels. Then we've seen the metal come out. Rob, do you or anybody else who wants to take it after Rob have any thoughts on how to interpret that and what we could possibly take away from there?
So what I predicted would happen earlier this year was you're going to see a lot of metal. It'll stay in the depository, but it's going to move from registered to eligible. Eligible is that category we talk about where it's just storage. It really has nothing to do with the COMEX trade. You can't, put it up to a contract. You got to make it in the registered category. And that's exactly what we've seen. I think silver's under 100 million ounces in registered, first time in a long time. The question is how much of that eligible category is actually liquid. That eligible category, if you look at when they first, it's around 2000, 2001, when they first developed the two categories, both registered and eligible. And you can see over that time frame in both metals, most of the metal has flowed down to eligible, meaning it's not really there to be traded on the COMEX. Now, sometimes it does float up to registered because people are willing to give the metal away. But as we talk about what we all talked about in the last few minutes, the financialization of the economy, people know that this system is going to burst, and when it does, it's going to burst big. How many of those guys that are holding metal on the COMEX in that eligible category are actually going to give it up at today's prices? Is it liquid? Sure. Is it liquid at $25 silver and $1,800 gold? Fuck no, it's not. It's not coming off at those prices. So what you're seeing is it being drained into the strong hands. Eligible, I would consider strong hands. Registered is trading stock. The trading stock is coming down. The strong hands are now starting to hold that metal. And that's what you clearly see in the data. I said it would happen 8 or 9 months ago, and that's exactly what's happening now. As we get towards the end of the year, people are saying, I want more of it here so that in case the shit hits the fan, I've got my metal. I'm not putting it up for these contracts.
Just to add to that, I mean, we saw with the work that Ronan Manley did that as much as 50% of the eligible category is not even available to be moved into the registered category. So it's the 280 million ounces or whatever that's in the eligible category right now, as much as 50% of that is mythical, and that's by the CME's own admission, right? He had that letter that was on the CME website that, I hate digging through that website. It's a pain in the ass, but that's how he makes his living. So, and the other point I wanted to make about that is when that point in time comes when people scramble to get their hands on the metal, it's not clear to me that a lot of the people who keep their metal in COMEX depositories are even going to be able to get it. I mean, a lot of big chunks of that, I would bet, have been hypothecated, delivered several times over. We see that goes on the LBMA all the time, and some of it's probably even been leased out. So
that's a good point, Dave. That's something that we need to drive the point home. After looking at what the Perth Mint did to defraud their customers of the metal by running a fractional reserve scheme, and Daniel and I proved it by looking at their financials, by looking at all these unpulled and unallocated accounts, do we actually believe the COMEX actually has all of that gold and silver they say they do, or they haven't lent it out or leased it out, or like you said, rehypothecated it in some other way? The thing that we don't see in the COMEX data, and they never let you see, is all the ownership records of the metal and also the metal itself. When they run their audit reports, they're really squirrely audit reports in which you can tell the way that they report that you could fudge with the numbers easily. So we really don't, much like we don't know how much gold is still in Fort Knox, we don't know how much gold and silver is still on the COMEX depositories. It could all be smoke and mirrors. We don't know that.
That's right. And when I first got into this sector back in 2001, 2002, there were guys back then who were considered super hardcore gold bugs. Andy, you probably remember like Eric DeCarbonneau. I don't know if you read his stuff. Brilliant. And if it's still available on the internet, people should Google Eric DeCarbonneau and read some of his stuff that was published in the early 2000s. It's eye-opening. But these were guys who said, you really don't own your physical gold and silver unless you have it in your possession. Mm-hmm. And this idea about gold being leased out of bank vaults, that's one of the reasons why these guys were saying that. And that's, it took me a couple years of ruminating on that to really figure out what they were saying. But, now I agree 200%. You really don't own your gold and silver unless you actually have it under your control in your possession. And you don't have that when you have your gold and silver at a custodian.
Yeah. And if you are, if you don't want to store it all at home, there are ways to find people around you that will store your stuff that are legitimate, that aren't one of these depositories that are going to lend it out. But you have to be careful there. You have to be careful who you go with. But there are ways to safely secure it if you don't want to have it all in a home safe. But ultimately, if you have it in your home safe, it's yours. You know it. You can walk down, to your safe, open the safe, and you have it. And that's probably the safest way to have it as an individual.
Let me just make one quick point, Chris, real quick. We talk about how close we are to this bust up. Even if you take the 280 million in eligible and call it 380 thousand ounces, 380 million ounces, right? That's how much is on registered and eligible, correct? About 380?
I looked at the numbers this morning. That's about it.
Okay, so there was 300 million ounces delivered off of COMEX last year alone. And this is the mechanism that sets the price for the globe. I mean, we're this close, aren't we? I mean, are we not that close, or am I missing something? If 90 million ounces can be backdoored out of SLV in a matter of weeks, if 300 million was delivered last year, over 200 million already this year, are we not that close?
It just takes one event, Andy, right, to drain all of that liquidity out.
And I might add, gentlemen, that one thing that, as brilliant as Dave Kranzler may be, he did not factor into his calculations, is that with the incredible, unprecedented leverage that Wall Street has piled onto all the shitty products that they offer, Rob, that one event could well be Rafi requesting delivery of contract.
It could be.
The way Jeff Curry, Dick Hayes, and the other gangsters hedge, Rafi's one contract could have rehypothecated the entire system thousands of times, since even Jim Rickards in that video we made the other night mentioned that the COMEX advertises they are not a source of supply. Blythe Mesters advertised that. And in this great Jim Rogers video, he talked about how he was short JP Morgan calls specifically because of JP Morgan's commodity chief, and the fraud that occurs there. One last story, if I may, before we wrap up. I have a special fondness for hearing even Jim Rogers talk about silver, because back in 2011, once I had worn out everybody on the New York Stock Exchange option room with my gold and silver talk, Jim Rogers, he's coming down for one of his CNBC interviews, which is in this top room in the main room of the New York Stock Exchange. And by then, I just finished reading one of his books, getting into silver. This was after I bought my 1,000-ounce bar when I saw the Goldman Sachs note that QE2 was coming. So Jim does his interview. I'm walking over there. I may have timed it so I got in the background shot of the CNBC camera. That's another story. But Jim's over there. I walk. I'm like, "Hi, Jim, Mr. Rogers, big fan." I try not to be too much of a fanboy, but I was like, "Yeah, I appreciate your books and what you've been saying." He takes silver coin out of his pocket with this. Look at here, Sonny boy. Tones. He's like, "Silver, son. That's what you want to get." Although it's one of those interesting the sensei moments, because I'm like, Jim, that's why I read the book, baby. I got my 1,000-ounce block sitting at home. Andy, yes, that is the same block that I learned that when you carry it from the New York Stock Exchange on the PATH train, that interestingly enough, 1,000 ounces of silver actually weighs over 30 million pounds when you're getting that triceps workout with that baby. So I might add, it was great hearing Jim, even the great Jim Rogers, bitch slap JP Morgan and the fraud that they do. And I would suggest that it is coming to an end. I think it'll be sooner than later. But before we wrap up and have some final parting words, I want to thank you all for being here. I'd also like to thank Silver Viper for sponsoring this panel. And a couple of you guys are going to be able to stick around, answer some questions in the Silver Viper booth after we're done here. All right. Andy, you kindly donated some silver to help get it into the hands of some worthy people. So you have either a 10-ounce bar or maybe 10 silver individual coins that we can give away in the silver booth in Silver Viper, because I know people love getting free silver. I have not yet heard the correct answer to how high
someone post
those margin contracts. Dave, would you like to take a stab at this one, sir? 1980, what is in Paul Sarnoff's book, what does he say is the peak level they raised? It started at 1,000, went to 2,000, 3,000. How high do you think these fraudsters actually raised the margin requirement in order to make sure that everybody could realize today just how long this thing's been a complete fraudulent entity that doesn't even have a source of metal?
Well, it went to full cash.
That's not what I took away from Paul Sarnoff's book, which is going to be the correct answer, at least for this one. But what number do you think Paul Sarnoff says is the highest it got up to?
Hang on here.
I said 35,000, but I was wrong, Dave.
That's
So
the
you may have
answer
to go
to a
higher than
different
that.
question, Rob, but a great answer nonetheless, but not the correct one in this context, unfortunately.
I was wrong.
Although, Rob, I will still give you an ounce of silver that you could give away to someone in the Silver Viper booth.
Oh, Chris,
A
I'm going to
couple-
be donating
pick
5
the winner.
ounces. I'm going to donate 5 ounces of silver in the Silver Viper booth. And the way that I'm going to give away my 5 ounces of silver is people have to come to the booth and ask questions. And everybody, the first 5 people that ask a question for us, I'll give away an ounce of silver.
Oh, I
Can I
like
ask
it.
a question in there?
Dave,
125,000.
let's save the silver for
I
this.
say 250,000.
$125,000.
Mac is the winner because he knows more about silver history. In Silver Jeopardy, question 1, $75,000 per contract is what Paul Sarnoff says is they raised, first to 2,000. It's like, well, we didn't cheat everybody out of their money yet. Let's try 3,000. Well, we didn't cheat everybody out of their money yet. Let's try 5,000. And you can see how this pattern accelerated. We won't go through the full count here. If anybody wants to keep down how fraudulent the COMEX is, maybe Ross the boss will be there to comment on the CFTC's actions. I didn't personally invite him since I never heard back from my letter. But with that said, any quick, I know all of you, I believe, are familiar with Silver Viper. Before we wrap up here, 1 or 2 sentences, just keep it brief. Any thoughts on Silver Viper? Dave Kranzler, I know you're familiar there.
Yeah, I mean it's one of the many junior junior development companies that has, 5 to 10 times potential upside from where it's trading now. And that's in the event of systemic continuity, not in the event of the system blowing up and silver going to $20,000 an ounce.
Which Dave will be talking about. You can interact with the legend himself. Dave maybe will even bring his tennis racket. Rob, a sentence or two on Silver Viper. Anything people should know?
Yeah, Silver Viper is looking for silver in the famed Sonora area of Mexico. Mexico is the #1 silver producer in the world. They're at the La Virginia Gold Silver Project, and they've had great drilling highlights and great exploration highlights. So as Dave said, this is going to be one of those companies that's proving out their reserves, that as the silver price rises and more interest comes to it, they're going to do very, very well. And one of a handful of companies, because there aren't many primary silver producers in the world. Silver Viper is going to be one of them. So if you're looking for getting into a mining stock investment, Silver Viper is a really good candidate.
And it's a silver gold mineralization that they're finding, not silver base metals.
Yeah, it's silver and gold. So you got both your silver and your gold in there.
And Mr. Schectman, did you happen to run into Steve Cope, who was quite sharing the knowledge last year? Steve Cope, who runs Silver Viper. Did you meet him at last year's SilverFest?
No, I wish I would have. I know a little bit about it. I'll just, Rob kind of stole
into the Silver Viper booth now. That is a great strategy. Take some questions, exchange the silvery information.
For sure, and give away some silver coins for sure. But Rob stole my thunder in that of all the silver that comes to market, 850 million ounces last year, only 30% came from primary silver miners. 70% comes from companies mining other things that, oh, look, we found some silver. The big deposits were found long ago. So when you talk about the leverage that you can get working with a quality company like Silver Viper, it's extraordinary in the respect that if they do become a primary miner, as Rob says, you're dealing with upside potential where a 10 or a 15 or a 20% allocation to these junior mining companies can outperform your entire portfolio if you hit the right one. So, yeah, no, I'm a big advocate of quality companies, and especially in the silver space, because they're few and far between, and you hit the right one and it'll be life-changing.
And I might add that while this is certainly not licensed financial advice, although you are welcome to invite your financial planner or local analyst into SilverFest II so that they could come to the silver booth, win free silver from Andy, bask in the knowledge from Dave, Rob, and Rafi. You going to be joining us in there too?
I'll be there.
Yes. So a lot of good stuff happening. And with that said, why don't we just wrap up here? Rafi, thank you also for being wise and for being here, and hop on into the Silver Viper booth. Thank you, Steve Cope. We'll give away some silver. And Yara, if you're ready to end us on the main stage here, I'm going to go hop in myself. And thank you, everyone at home, for being here. Come bring your lunch, get your margaritas, your silver, head on into the booth, and we will see you there.